Welcome to the Trading Lounge, and here we're looking at the indices and starting with the US 10-year notes, and we were looking for a retracement level back up into the 124.70 area here, which was the 61.8 retracement level, but I can see from this particular structure here that we've got more to go here, so we'd be looking at this in terms of finishing this particular structure here. That would give us, from here would give us 1, 2, 3, 4 and 5 to here, and this here would be either an A and a B and a C wave to here, and failing from here, and if that happens then US stocks will push up. If however we get 5 waves up, which is 1, 2, third wave, fourth wave pulling back to the fourth wave of 1 lesser degree, and then a fifth wave here, if we get 5 waves here, then we've got a bullish pattern for US notes and a bearish pattern for US stocks. So 5 waves up here would see an A and a B and a C, and then further upside here as such. So we'd see a larger correction in the US market. So let's have a look at those at the moment. So the S&P 500 here, because of this move down past the 38.2 retracement level here, we have to call these 5 waves in through to here. This is pulled back to the 61.8 retracement level of this previous wave here, and just in here. So that's kind of comforting for the bulls. However, the move down from here so far with US stocks is in 3 waves, so we can look at this as an A and a B and a C wave here. But if this low gets taken out here, that would give us 4 waves, 5 waves here, then that would give us an impulse wave to the downside. And if that's the case, then we would see further downside, we would see a and a B and a C correction, and then another 5 down. So it's kind of critical that that stays in here and we push up from this point here. The Dow Jones is much the same as well. It's got the 3 waves down through here. So if it takes out that low there, that will give it 5 waves down as an impulse wave. And as an impulse wave, we would see a counter trend back up in 3 and then another 5 down. Okay, so that's what we're looking at there. With the European markets, they seem to have 5 waves down already. So the DAX here, we always knew the DAX would be flickering around the 10,000 mark as such, and we're just doing our best to work out the count for this particular market at the moment. So I won't go into a lot of details here, but one of the main points here is that the move down here appears to be in as an impulse wave, and that would be the same for the FTSE as well. So let's just have a look at this here. So we're just really looking at this being from wave 3, calling this in as wave 5 of 3 here, looking as an A and a B and a C here for wave 4, and then wave 5 to the upside here. And just looking at this a little bit further here, so this is more impulsive to the downside here. I don't know if I've counted it. Yes, I have. So the impulse wave down through here would be, and I've taken this from the cash market, so 1, 2, 3, 4 and 5 down here. That may not be finished. There may be 1, 2, 3, 4, 5 to come, 1 more to come down through here, and then we'll see a bounce coming in from that point there. So that's that. So look for a bounce off 9,700 if you want to short this, then look for weakness going into the 9,800 here. As such, the FTSE is the same as well in terms of its move down through here as well. It's certainly an impulse wave to the downside, probably set off by the DAX, which Germany had lower export and import figures overnight, so a cooling of the economy there, but 1, 2 and looking for the third wave down here, a little bit slightly different here, but 1, 2, 3, failing at 67.50 area here, and moving down to the 67 area here. We expect some consolidation in this area here, essentially an A and a B and a C bounce in line with the DAX as such there. The Australian market, I'm just going to go to the bigger picture here again and look at both counts because Yeah, they're both valid, and on the weekly chart here, the top that we've got in it, we've got a bearish count and a bullish count. The bearish count is that we have a top in place on wave 5 of C of B here, primary wave B. So in this case, we'd be looking for a much deeper move to the downside. So that's while that high there is still in place, then this is valid. And just looking at that on the daily chart here, it's simply this structure here or this one here. So what we were looking for on the cash market is a move above this one here to confirm further upside. We just didn't get that confirmation there, which is a little bit annoying. So we've got to keep this bearish count in play, and this market could roll over from this point here, and this is something that we need to look at. The SPY moved down much lower than the ASX 200 CFD. The SPY is trading at 54.45 from memory, so lower down here. So that's a bit of a lead-in for traders trading the index here. On the bullish side of the market, then we're looking at, this is the wave count we've got here for this. We've been over this quite a bit. So in this particular case here, we're still looking for a move above these highs here to confirm this. And in that process, we understood that the move up to 5,500 would have problems at the old highs here and the number 5,500, as it would attract the largest orders there. And we're expecting a sell-off, and a corrective pattern across the 5,500 there. So let's have a look at that as such. We could count this move up through here as an impulse wave up through here. That means that the 50-60% retracement level would be back down at the 54.50 sort of area and below. That's where the SPY is actually trading at the moment. So it's actually trading lower than the ASX CFD. So that's a bit of a lead-in. The current move that we've got coming down through here is only in 3 waves so far. It's not 5 waves. But even if it did turn 5 waves, it doesn't mean the end of the world for this for the bullish count as well, because as a corrective move, we'd be looking for an A wave, a B wave, and a C wave here. Now this A wave here would be in 5 waves here as such, and we've got 3 at the moment, so we're just in this point here. And then we'd be looking for this B wave up here, which would be an A and a B and a C. And then we'll be looking for another 5 waves down into the 61.8 area here. So that's quite possible from there. That's the sort of extent of it. If the market moved sort of beyond this area through here, then we'd need to look at the bearish count being in play as such, and that would basically be looking at this as an A wave here, B wave, and a C wave over here. Well, really, actually, this way around here, an A and a B and a C wave coming into here. So this is just the alternative count. But we're staying with the bullish count until proven otherwise, but we're mindful of that bearish count. Now, within this space here, one of the first things that we looked at, we talked about earlier, as we always do, is that when working with a large number like 5,500 here, the first levels that we work are subgroup 2 below and subgroup 1 above. Now, subgroup 1 above held the market as we expected it should. That's 55, 10, 20, and 30. Not finding support on top of 30 is part of that process, and that's done its job. And we're looking here for group 2 here, 65, 72, and 80 to support the market here, and it is. However, we'll also need to accommodate a move down into 54.50 once the cash market opens as well and drags the market down somewhat further. So yeah, look, in this particular move here, everything's sort of going according to plan, and originally I thought it would just go to here, but because the US and the European markets have moved down much further, we really do need to look at this in terms of a 5-wave move here, such, which would be drawing tools chucked a wobbly, so it's not going to work, but down for 1, back for 2, the third wave down. Still got a little bit more to come here for the third wave, the fourth wave, and the fifth wave coming down to 54.50, and then an A and a B and a C wave trying to retest the 5,500 here, and then another 5 waves down to this area through here. So that's pretty much the basic pattern of it. Today we've got China figures coming out 11:30, so they're going to be positive. So if we do get the push down into here first, and then the China figures back up into here, then you'll know what's basically going on from that point there. The other point is that you just need to watch the volume if you can and seeing which stocks leading, see if it's materials or finance, and look at the market depth for at least BHP and CBA there if you're trading this market, because that's half the weight coming from those sectors there. Alrighty, thanks for listening.